Ladies and gentlemen, without further ado, I would like to introduce you to our keynote speaker, Mr. Rajeeva Bandaranaike, who is the Chief Executive Officer of the Colombo Stock Exchange. He has served in a senior management capacity at the stock exchange in trading, clearing and settlement, branch development, marketing, human resources, and has led several market development initiatives. He has also served as the Chief Executive Officer of 2 listed companies and counts a total of 30 years experience in financial services. Mr. Bandaranaike holds a degree in law from the Open University of Sri Lanka, a master's in business administration from University of Southern Queensland, Australia, a postgraduate diploma in marketing from Chartered Institute of Marketing, UK, and the stockbroker certification from the Securities Institute of Australia. Ladies and gentlemen, I would like to invite Mr. Rajeeva Bandaranaike to deliver the keynote address.
Good afternoon. I hope you can see the screen. And first of all, thank you to EduConsult for organizing this series of webinars, particularly devoted to capital markets. And they have been doing this, I think, consecutively for the past 8 or I believe 9 years, and drawing interest into the capital market and discussing some very relevant topics during the course of the deliberation. So congratulations for continuing this effort, and for the perseverance despite very challenging conditions to continue your initiative. So we are very supportive of what you do. So today, what I intend doing is just to share with you some perspectives akin to the topic about current trends and some developments. So I'll share some of the challenges, share some of the opportunities, and also some developments as we go along. So to put things into perspective, mostly, let us take a view of the prevailing global environment. As we quite know, with the pandemic, we had the global economy shrinking, and this has translated to fairly retreating of economic conditions globally. And over the same period also, as we know, Sri Lanka's economy also contracted. Of course, we expect it to sort of turn the corner this year and going forward. I think primarily our challenges as a result of the pandemic has affected a lot of our industries, including exports and tourism. And with the slowing down in some of these sectors, the restrictions, it has had a direct impact on Sri Lanka. And some of the policies that have been planned were also did not materialize from a country perspective as a result of what happened in 2020 and 2021. So I think one comment is that we are fairly broadly dependent on the conditions for economic vibrancy to come on. So that's a very quick comment to start off with. So let me very quickly get on to capital markets itself and try to talk about why capital markets are important. These are nothing new. I'm sure most of you know this. The importance, both in terms of the government as well as the private sector. I think depending on how active the market is, depending on where we are, I think markets play a different role in the different jurisdictions. Some are more successful than others. Some at certain points of time have played a very pivotal role in attracting foreign investment and promoting the creation of new capital, providing a diversification for investors, etc. So I think if you look at our market too, we have had ups and downs, and at different points of time, which I will share with you, we have had different successes and not so successful periods as well. But overall, I think capital markets can play a pivotal role if it is used and harnessed effectively. And I think that is the key that we need to keep in mind. So just a quick look at where we are presently. So if you look at globally, stock exchanges are known as capital market infrastructure providers, or CMIP. So globally, there are about 250 such regulated exchanges. Sri Lanka has 3. So we have the stock exchange, we have the depository, and we have the government central bank depository as well. If you look at listed companies globally, there are nearly 50,000 listed companies. We have 285 here. And if you look at equity market capitalization, I think it's over 100 trillion US dollars. And our market cap is a little over 18 billion US. So comparatively quite small, but growing. Just to drill a little deeper into where we stand in terms of the rest of the markets, the Morgan Stanley Capital Markets Index MSCI classification has classified markets into developed markets, emerging markets, frontier markets, and the markets are standalone. Now we belong to the frontier market sector, and we are grouped in Asia with Bangladesh and Vietnam. So we compete with Bangladesh and Vietnam for foreign funds, and we are told that Pakistan very soon, I think, may get a kind of a downgrade to a frontier market. So these are our competitors. In a sense, I think we are comfortable where we are, because it's better to be a big fish in a kind of small pond rather than be a small fish in a big pond. Because if you jump to as emerging markets to Asia, and if you do qualify, you have to start competing with markets like Thailand, Taiwan, Malaysia, Indonesia, India, China, etc. So those are very big liquid markets. So probably our placement right now is good enough, because this is where we can compete effectively for some of the foreign funds that may come our way. And when foreign funds are allocated, in fact, they're allocated according to this broadly according to this classification. So let me focus on the main topic today about challenges and opportunities. I'd like to discuss a few challenges and also what the opportunities are from the way I see it. In terms of challenges, I think we have 3 key challenges. One is, of course, how well we come out of the pandemic, and we know the impact it's having to society and the economy. So we need to really see how well we come out of it, how soon we come out of it, because that has a direct bearing, I think, on almost all sectors of the economy. The second key challenge that we have is about foreign investment. How do we attract FDI and portfolio? And I'll share some figures on that as well. And thirdly is about management of the exchange rate, which is also a critical issue right now. If we talk of opportunities, yeah, I think there are lots of opportunities. I think we have the potential to grow, because we are still a small market. And again, when I will share some statistics, you can see the potential to grow. Then we have potential for pension reforms, money that can potentially come into long-term investments. We have a low interest rate environment. We have low valuations right now, which makes us attractive from a regional perspective. We have strong corporate earnings growth. You have read about it today. You have read about it all this time, about how well corporates are doing despite these challenging conditions. We offer a good diversification opportunity, and we are forging ahead with a lot of market infrastructure developments. We implemented DVP recently. A central counterparty system is also now being planned. We're planning new products. Some of the details I'll share with you. SMEs are coming into public markets for capital raising, and I think the market has undergone a greater degree of digitization, which makes the market accessible. So opportunities, there are lots of opportunities. So let us concentrate on some of the challenges. I think the key one here is about economic growth, and I'm sure some of the other speakers will dwell better into that. But just to keep that in mind, the exchange rate, of course, is a challenge, and you know where we are right now in terms of exchange rates. Again, I spoke about FDIs and portfolio. We have seen a decreasing trend in FDIs. Hopefully, it's going to turn around with so many projects in the pipeline, and we have the portfolio investment as well, not doing too well, and I'll share that detail in just a moment. If you look at some of the net outflows, it's not as bad as last year, but still we have a net outflow. So there is a need to canvas these foreign investors back again into a market. So in terms of portfolio, we have, of course, portfolio investment, these hot money flows, they come in and out, then they go out as fast as they come in for different reasons, but it's very cyclical. And I'm sure these investors who are used to Sri Lanka, they have been long-term investment, they're going to come back, but it's a matter of when do they really make their case to come back. So which leads me to the point of where we are in terms of a market. So dominated currently by local individuals. So the local retail component has gone up significantly. If you look at 2018, the 22% contribution came from local individuals. Now it's up to 56%. And the foreign investor contribution has dropped from 44 to 8%. So that's our market composition. So today it's dominated by local, market is dominated by local investors. So let's focus on some of the opportunities as well. Needless to say, interest rates has had a direct impact on the movement and the volume and the activity on the market, because locals have opted to get into equities in a big way, and that has really fueled the interest in the local market. And low interest rate regime, of course, has a very favorable impact on capital markets, particularly the equity market. And this is just an illustration of how rates have behaved. If you take a view from 2014 onwards, how the deposit rates and the lending rates have been. If I talk about valuations, and if you take a quick snapshot and do a comparison with our peer markets, I think in terms of valuations, we are still very attractive across Asia and comparatively cheaper. So if from a perspective of foreign investor, if you look at our market, we still trade at a considerable discount to some of our regional peers. So it makes us attractive for foreign investment. So valuations are good enough and well placed to attract the kind of foreign investment or portfolio investors that we are really looking at. So valuations are at just close to 9.96 times in 2021. If you look at the price to book value, again 1.16, and I think we have very decent dividend yield. So if you look at ingredients, I think all the ingredients are there for any foreign investor to look at, but certain other things have to fall into place, like for example, the exchange rate, our country rating, and a few factors like that. But from a market perspective, we seem to be having the ingredients to make our market quite attractive. Even if you compare ourselves over a long period with the MSCI Frontier Markets Index and the MSCI Emerging Markets Index, you can see that the ASP has performed relatively well in comparison. Whether you take a 3-year performance, whether you take March 31st last year to date, or if you take year to date, our all-share price index has outperformed all of these other indices, particularly the other markets, frontier and emerging markets indexes. So we have something to talk about in terms of attracting foreign liquidity. Again, we have seen a fairly significant increase in liquidity of the market in recent times. What I'm showing here is the turnover velocity, which is a measurement of liquidity, which has increased almost double from 2019 to 2020 to 15%, and then it has further almost doubled again in 2021 to 28%. So it's a liquid market to some extent, of course, restricted to certain securities. Not all securities are moving, but nevertheless, overall, there is far greater volume being transacted as well. Then the other matter that I spoke about, opportunity to grow, is that in Sri Lanka, our market cap to GDP ratio is still at 20%. Whereas if you look at some of the other countries, they have almost reached saturation. Look at Thailand at 100%, India, Malaysia, etc. So we have room to grow, which is again a good sign of potential. So we have market cap to GDP. There's a lot of room for growth, which will allow larger companies to still come in and list and increase our market cap. So this room to grow, Bangladesh, Sri Lanka, both have a lot of potential for growth, and I think that's a good opportunity. So let's take a quick snapshot of how our market has evolved. And very clearly, when you see this graph over a long period from 1990 to 2021, up till 2009, we were at one level of the index of the market. And very clearly, we have moved up to a different level now. So we are playing at a different level altogether in comparison to the pre-war period. Unfortunately, we have had other hiccups, economic, social, and then the pandemic hitting us. But we have had probably a different operating level in terms of where the indices are now positioned in comparison to pre-war. So again, we see this as an evolution and an opportunity that is there for the market to get re-rated. So let me very quickly share with you some of the developments or the opportunities in the market. So again, a snapshot of what we have planned for the future in terms of products and in terms of other infrastructure developments. For example, for this year, we have already planned at least 4 new products to be introduced. The real estate investment trust, the rules have been gazetted. There are promoters who are already working on that. The tax concessions have been gazetted, except for the stamp duty. And the process to come in and issue a REIT has now been enabled. And as we speak, I think there are at least 3 or 4 promoters who are talking to the SEC and engaging the SEC on the issue of REITs. Then we are also talking to the banks now to develop a gold product, a paper-based gold product to be issued as an OTC product. Then the third product that we have launched is the rules have been done for the OTC market for repos of corporate debt, which was probably a missing segment in the corporate debt market. We are currently onboarding primary dealers and others who are interested in trading debt. So that process is on, all the rules are in place. So we will very soon see an OTC market for corporate debt being enabled. We are also just on the threshold of permitting local companies to raise dollar-denominated equity. So a local company effectively can go and raise US dollars from listing in a separate multi-currency board. We have received monetary board approval and it's going before the Public Accounts Committee in Parliament, in fact, on Thursday. And once Parliament does approve it, we can permit local companies to raise US dollar denominated debt. And we feel that there is opportunity for some of the export-oriented companies to make use of this. So we have at least 4 new products that have been planned for this year to give that level of diversification for both local and foreign investors. Going forward for next year, we are planning stock borrowing and lending on top of short selling, mortgage-backed securities, as well as new products, and then moving on to ETFs and of course the next generation products of equity derivatives, etc. once we have a central counterpart in place. So in terms of market infrastructure as well, we recently we moved to a new settlement system, a delivery versus payment settlement system, which is probably the first step that we can take to enable and take us to a plethora of new products. I think if you're talking about financial derivatives, you need to have what we call a central counterparty system, where the risk is managed by this counterparty company that is set up. So in order to have a CCP, we had to first do the DVP, then we will move to a CCP, and that will enable new products, and including overnight or regulated short selling and stock borrowing and lending as well. So you will have all these products now being enabled as a result of this infrastructure development. And then the other part of it is that, again, we went on a digitization drive, which has enhanced the accessibility, particularly for Sri Lankans, and we are trying to extend it to overseas parties as well. And the other part of the development is a demutualization, which is essentially improving the governance structure of the stock exchange, where we convert the existing exchange from a guarantee company to a shareholder-owned company, which there the ownership is widespread and more representative of the wider stakeholder group. So that's another significant development that will come through the enactment of the new SEC Act and a Demutualization Act. So a lot of plans and very interesting times as we go along, where all those pieces will come into place to take our market maybe to a totally different operating level that we are in. So very quickly to end off, before I finish off, I just wanted to share one or two slides about the again the interest among investors. See how the number of accounts per day has almost doubled from a couple of years ago. That's a good sign. And over 90% of the accounts that are opened digitally. And the second factor is that a majority of the accounts that are being opened are opened by those who are below 40 years of age. So there's a shift and a trend towards a younger segment of investors who have come into the market, which is again is a good sign, because we have traditionally had the 50 or 55 plus investor in the market, but now we are seeing a shift in that, where we're seeing a younger segment, more tech-savvy investors coming in there, maybe because of digitization, and also it's geographically better spread. If you look at all the new accounts that have been opened, only 50%, 57% are from the Western province. The balance is spread right through the country. So there is a better geographical spread also that is happening. And we have seen about a 70% increase in number of new accounts that have been opened. The kind of downloads that have been going on is phenomenal. Volumes that have been we have been seeing in recent times. So with that, I think I will complete my the few thoughts that I wanted to share. Before I do finish, I'd just like to share something with you from a very well-known investor who says it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So very important statement he's making. And again, another statement he made where he differentiates between value versus price. So price is what you pay in the market as a market price, but look at the underlying value in a company. And what he's basically saying is, don't focus on short-term investments and short-term swings, but look at long-term value investing. And I think I cannot help but also quote one of our prominent and key investors in Sri Lanka, Mr. Dhammika Perera, who I think he has gone public with this. He has started investing with just 300,000 rupees in 1996, and you know what he has ended up today. Same time, when he did make this speech, he said, I could have easily afforded at that time to invest 1 billion, but I invested only 300,000. And it was so for the next 4 years. So the next 4 years, he spent learning about the market. So he gave us a very good lesson that he learned the market first. So he says knowledge is the key. So with that message, I think I'll stop for now. Thank you very much for your patient history. Thank you.
Thank you very much, Mr. Rajeeva, for the keynote address on the recent trends, new developments in the Colombo Stock Exchange. And we really appreciate your encouraging words towards UTO EduConsult for continuing to host the Capital Markets Conference. And definitely, Mr. Rajeeva, your support goes a long way with this journey.